I adore watching YouTube. Community for Tesla. Many of these men have been with Tesla from its inception and have made enormous sums of money by making accurate forecasts. A YouTuber by the name of Dave Lee is among the strongest supporters of Tesla on the platform. This guy makes absurd Tesla predictions. Let's look at one of the more absurd ones. She asserted in a recent post that he will be able to boost the value of his Tesla stakes by an absurd factor of 100. Yes, 100 times your initial investment, which he had originally estimated would grow by a factor of 10. His first prediction was for Tesla's market cap to increase from $3 billion to $40 billion, but he now believes that $300 billion is more plausible. That level of faith is astounding. In the world of investments, a 100x return is unusual, if not non-existent. Watch to find out why he believes a revolution as revolutionary as Apple's iPhone is about to occur. Press the like and subscribe buttons before we arrive. According to Dave Lee, Tesla is only getting started on its path toward innovation-driven complexity. The investor was shocked to see that, despite the current situation of the global economy, Tesla stock has gained by a factor of 100 in just over 8 years by simply holding common shares, as you likely already know if you're an avid listener on this channel. Even though many people were expecting Musk to talk extensively about Twitter's future, Tesla's Q3 figures were impressive. Some key takeaways from Tesla's earnings call included the company's stellar quarter, in which it exceeded analyst projections by $3.32 billion in revenue and $18.7 billion, or 81% year-over-year, according to Barron. Tesla easily outperformed Wall Street's estimates, which ranged from 2.20 cents to $2.30 per share and $18 billion in revenue. In addition, the company's operating profit exceeded analyst projections by approximately $1 billion, which caused Tesla shares to rise $5 in after-hours trading from approximately $976 to nearly $1,177. Many rely on their interpretations of the earnings report to determine how well their firm performed in comparison to analysts' estimates of its earnings per share. Margin of revenue and additional metrics, he continued by saying that many analysts were taken aback by Tesla's earnings report because they had been focusing on how much the company had beaten analysts' forecast rather than on whether or not it had exceeded investor expectations. However, Tesla's share price only increased by 6% after the report because the company had only met or marginally exceeded investor expectations. Investors and analysts' expectations for young, high-growth businesses are frequently at odds. Due to recent outstanding delivery numbers, which exceeded market projections, investors already had high expectations for Tesla and its management, which is what prompted the call and announcement. According to Lee, it is understood why this is surprising because a stock's worth is determined by a company's capacity to turn a profit. As a result, the reason Tesla's first quarter results were below expectations may be directly attributed to revenue constraints. Due to heightened government efforts to contain the COVID-19 virus and a spike in cases recorded in China, Credit Suisse says that Tesla's Giga Shanghai facility was shut down on March 28, despite the fact that the Shanghai factory, which produced over half of Tesla's vehicles last year, had to close for several weeks owing to an electrical issue. The Swiss expressed optimism about the company's management's ability to keep things under control. The Shanghai factory is the largest by output, so a drop of about 90 was anticipated, and the idling, which started at the end of the first quarter, was expected to have a major effect on the company's performance in the second quarter. According to Lee, 1.47 million units are expected to be delivered this year altogether, and deliveries in the current quarter should be comparable to those in the first 3 months of the year. Tesla needs to deliver more cars than investors anticipate and raise more money than they had projected in order for its positive quarterly ascension to continue. Dave Lee is not alone in his first quarter optimism regarding test development by 2030. Investor layer for 2022 is warm. According to Capital, by 2030, Tesla shares should yield a tenfold return, if not more. Recent improvements in the company's major holding have led to an increase in Tesla holdings in the first quarter of 2018, with the assumption that the company's stock would outperform the S&P 500 at that time. Given that Tesla was only now beginning to see notable growth, they estimated that it still had at least 10 years of development ahead of it. As a Tesla investor, Gary Black made some intriguing predictions about the future of the electric vehicle blend. These included the idea that the market valuation should be $4 trillion, and that, if all 1.4 billion shares were outstanding, Tesla's market cap would be close to $4 trillion. The way Amazon overcame the NASDAQ boom in the financial crisis is instructive. Based on Black's forecast that the number of electric cars on the road will reach 60 by 2030, the company is valued at $1.09 trillion today, assuming 100 earnings per share by the end of the decade. Although sales of light automobiles worldwide are expected to reach 85 million units, as projected by Black, for example, things may get worse before they get better. Tesla is expected to produce about 10 million vehicles annually. The price of Tesla shares fluctuated greatly in April 2022, going from a high of $1,152 to a low of $902, all on the movable $1,000 barrier. The current drops in Apple and Microsoft stock prices in China indicate that investor sentiment is shifting away from high-tech companies. The frequency of recurring shutdowns that appear to be unrelated has drawn criticism. The Tesla bull emphasizes that it is difficult to see how Tesla will be able to meet its delivery targets given the circumstances in Shanghai. Wedbush resident Dan Ives rejected the note on Tuesday. The depth of China's industrial problems, in Ives' opinion, is the source of his greatest concern about the future. One expert believes that Musk is in a horrible situation for the second quarter of the rest of the year, since there are a lot of unknowns around the second quarter of China production, which will affect expectations for the rest of the year. I get the impression that Cathie Woods is not at all disturbed by these stories. According to a new projection by ARK Investment, the stock value of Tesla might reach $4,680 by 2026. According to 2016 company projections, a share price of $3,000 is anticipated by 2025. As per a previous piece, the bull scenario predicts a price of $5,000 by 2026, whilst the bear scenario projects a price of $2,900. Naturally, $2,900 is a lot more than the stock's current price. Even under the worst-case scenario, ARK, an investment group, projects that Tesla's prices will nearly triple by 2026. We are informing investors that, despite being adjusted for our 2026 projections, we think our Tesla model is methodologically cautious and that, in 2026, Tesla stocks would likely trade more like those of an established company than a high-profit growing one. Dave Lee has often expressed his intention to hold his stock for the long term and his belief that Tesla would enjoy phenomenal growth by 2030. Kelly's Blue Book seems to provide credence to his beliefs. This is probably due to the fact that between January and March of 2022, Tesla's capital investment per additional unit of capacity decreased from $84,000 in 2017 to $7,700 this year. With 75 electric vehicle sales in 2022, Tesla ignited the U.S. electric vehicle market. Sales of Tesla's Model 3 and Model Y accounted for 68% of all electric vehicle sales in the U.S. in 2017. You can trust those figures. Due in part to the company's new Texas headquarters as well as its gigafactories in Shanghai and Berlin, Tesla was able to sell 7% of its cars in the third quarter, mostly Model S and Model X vehicles. Elon Musk's business is prepared to challenge for the top spot in 2023. The business intends to start producing its other vehicles, such as the Cybertruck Simian Roadster, later this year in an effort to surpass its 2022 production performance. We would be interested in hearing your opinions on this. What do you think the stock price of Tesla will be in 2030? Please comment. I'll see you in the upcoming video if you like and subscribe.